Today we're going to look at the MACD, or the Moving Average Convergence Divergence Indicator. We're going to show the basic premise behind it, and then we're actually going to show some reverse coding and actually give you as a trader a definite edge in using this indicator. First off, let's take a look at the MACD. I'm going to left click on the MACD button. It'll show two lines in the subgraph. If I right click on those and modify them, the formula for the MACD is pretty straightforward. The blue line is the difference between the first moving average and the second, 12 and 26 by default. That creates the oscillator. And then the third moving average is a moving average of that oscillator, which is the MACD signal, or otherwise known as the MACDA. That's set at the 9 period, which is the red line in the subgraph. Most traders will place a trade when these two lines cross. Let's take a look at the last two signals. 1340 was the cross to establish a short position. Late in the day, 1545 was the cross above to establish a potential long position. We can put arrows on the charts to highlight those crosses by right-clicking on the price bars, selecting conditions for marking bar, and I'll put in the two conditions. Now, the conventional means of trading these signals are to wait to near the close of the bar and placing the trades at that point. So in other words, you make sure that the cross is locked into place, and then you place a trade on the close of the 1340 bar at 1830 and 9/10, and your long position would have been roughly 1827 and a half. Now, to kick this up a notch, we can actually display the price points on the chart which cause the cross. That's done with the reverse logic formula. In this chart, we're going to apply the MACDX. And you can see here at each price point, or each price bar on this 5-minute gold chart, where the market has to trade to and close above or below to force the cross between the two MACD lines. Let's go back to our short position that we would have established at 1340. We can see that the price point was above the open, so we could have gotten in on the open of that bar. And on our long position, the MACD cross point was at 1827 and 1/10, which means we would have bought on the open at 1827 and 4/10. Knowing the price point on the chart certainly will give you an edge in the market in terms of where to put your buy and sell stops to enter. Again, we can go ahead and take this MACD and put it into the trading interface. If I right-click on the value box, show it into the trading interface, and at this point I can cursor down, right-click at 1825 and 2/10, and place a sell stop there. Let's go ahead and take a look at the formula for the reverse logic. And so this is the MACD reverse formula to show the price point on the chart. Most of the time the reverse logic formulas are rather complex. Many times they cannot be done on the user interface. If you do have some reverse logic formulas in hand that you might like to get into the product, please send them over to the product specialist at 1-800-525-1085. And we will see if we can do it on the user interface, or sometimes we have to put it into the programmers in C++. This indicator will be posted next to this video for download. Again, it's the MACDX custom study. This is Doug Jansen, product specialist in Denver, signing off.